Hey everyone, Cam Roberts here. I've got my good friend Trent Giumelli on a live broadcast today. Now, Trent, before I get him started, he teaches people how to create profits from real estate without buying, selling, flipping, or developing a single property themselves. He's a real estate authority, author, speaker, and property multi-millionaire based in Noosa, Queensland. And he teaches people the strategies that he's used to turn a negative position of minus negative 427,000 into a $100 million real estate portfolio in 6 years. So, Trent, thanks very much for coming on the live stream today.
Thanks, mate. Good to be here.
Now, one of the reasons why I got you on, because, you know, being a person that spends a lot of time on the internet, a consultant and marketer, you know, I see a lot of things going on. And recently I came across Robert Kiyosaki talking about a looming stock market crash. And,
Yes.
you know, when I read that, I thought, you know, there's one person that I know I could probably talk about that, and that's someone that's made a lot of money through all sorts of different markets. So I'm going to put you on the hot seat today with some of these questions and find out what your opinion is about the stock market, and probably more important, Trent, what people can be doing to prepare themselves, because the way I see it and what I've read, and you can correct me if I'm wrong, that it's going to happen anyway. At some point it's going to happen, whether it's next week, next month, or in 6 months. You know, the experts are talking about it's going to happen. Is that right? What's your take on that?
Oh, mate, my take has been on this for a while. It's going to be cataclysmic when it happens.
Right. Yeah.
I mean, all the hallmarks that we're reading at the minute, and just, you know, listening to the professionals that deal with it, are sort of predicting in the next 14 to 30 days it could be that quick.
Wow. Right.
Just looking at, I mean, everyone's feeling hyperinflation at the minute. You look at the Bowser, fuel's jumped quite considerably. In Australia, it's gone up like 50 cents. In the States, it's got almost doubled. The Fed's stressing out because they're all over the shop at the minute, trying to pass laws and print money that they can't sustain.
Yep.
You know, and borrowing's at its absolute peak right across the gamut of all governments, all countries, most countries, and most people. You know, everyone's sort of in the same boat, and at some point when it goes, it's going to be huge. Who knows when, but it's looking like it will be soon.
Okay. Now, some of the stats that are going on, and again, you can correct me because you've got your finger on the pulse where everything, you know, like this is concerned. They're talking about currencies going down, economies going down, and inflation going up. Can you comment on that?
Yep. Yeah, look, what's happening, you know, and this comes into the hyperinflation thing, is, you know, the currencies are devaluing. They've been devaluing for years. For those in America, you know, the Nixon took them off the gold and silver standard back in the 70s. You know, the fiat currency is running its course. It always does. It has a life cycle, so to speak. And you're watching now that whole market implode. So, you know, you're watching your bonds and you're watching everything. You're watching gold and silver being manipulated. Those of us who are in crypto is just doing this at the minute. You know, and everything's just all over the shop. You know, there's no sort of clear winner of what's going on right now, and you know, currencies are just getting lower and lower and lower. The devaluing of the monetary system is just ridiculous. So, you know, but we're still seeing, you know, a great example of that. You know, I buy and sell cars all the time, you know, as you know, and someone put it forward the other day. What used to cost $10,000 now costs $55,000, and it's so true.
Yeah.
Just using the car market for an example, you know, what I buy and sell is you know, a $10,000 car 24 months ago is now sort of that $50,000-$60,000 marker, and it's been good. I mean, obviously we've made some money out of it, but it just goes to show where hyperinflation really comes in. The markets are starting to fold in, and at some point, you know, again, who knows when that's going to be, whether it's in 14 to 30 days or whether it's longer, the market will shit itself, and you know, God help, just hold on for the ride, basically.
Yep. Now, I should point out, you know, when you're talking about cars there, it's actually even used cars. I was at a dealership previously, and the guy was one of the dealer salespeople was actually saying even used cars have gone up exponentially. You know, they're holding a lot more value, and you know, we're both in Queensland, and there's a big migration of people moving up to Queensland. So all you people down in Victoria and New South Wales, no need to rush up. It's lovely here without you.
You know, mind you, we're from New South Wales, so.
Yeah. So we've all got family down south, but there's just a huge demand for used cars. People can't get used cars up here, and I guess that's all part of that hyperinflation that you're talking about, right?
Yeah, it is. It is. I mean, to get a new car at the minute with everything going on, lockdown, stuff like that. Taiwan's one of the biggest producers of microchips. They can't get them at the minute because of what's going on with China. That's
Yeah,
delaying new cars. So, for instance, sake, the new order on a GT3, which is my favourite car, you're looking at, 18-month wait at a minimum. You go to Toyota and try and order a RAV4. I'm trying to do it for my mother at the moment. It's an 8-month wait. And then you look at the likes of, a 200 series Land Cruiser I bought one just before it finished. It's increased $70,000 in value.
right.
It's just unheard of. It's never done that. Someone's just put up, there's a Maloo that sold for $1 million. That's exactly right. You look at, things like R34 GDRs, they're just gone, just mental. It's just absolutely
Yeah.
stupid at the minute. And the used car market has been a great way to, divest, so to speak, if you've been on the pots.
Yeah. Okay. So we've spoken about cars. So let's talk about some of the other assets, because I know that you teach a lot of your high-end clients and clients that come to you for, helping creating profits from property that they don't own, buy or sell, or have to flip or develop. You also teach them about gold, about silver, about different types of investments.
Yeah.
Can you comment on some of those just briefly?
Yeah, sure. I mean, gold and silver is commonly known as God's money.
Right.
For those who are Christian or not, doesn't really matter. That's what it is.
Yeah.
That's what it's known for.
Yeah.
And it's always been a really good way to divest your wealth. And, in times of when things go south, often that will start to rise up in value. Now, going back to the currency side, there is talk that, if we do come off the fiat currency system, where there's a high likelihood that it will happen, that we'll move into what's known as the quantum financial system. For those out there that don't know what I'm talking about, go and research it. There's plenty of information on it. Gold and silver will multiply in values, and that's why we've been packing a fair bit of coin just towards that. I mean, we've been really pushing that with our clients. We've been, not that it's advice, but they can make their own decisions. But certainly, any raw earth or metals or anything like that's a really good way to safely put some funds away. The other concern I've always had, and specifically at the minute, and just going off track a little bit, is one thing that most people don't know is about, I think it was 2018, there was a thing brought in called the bank bail-in laws.
Yeah.
Whilst at the minute, everyone's wondering about, I can put my money in the bank and it's guaranteed up to $250,000. If the market goes the wrong way, it's the complete opposite effect. There's no guarantee. You won't be able to get your funds out of a bank account. Bank bail-in laws basically mean that they can retain your funds in cash, and they won't release it to you. I think it happened, from memory, I think it was Greece a few years back.
Yeah, in Greece.
Yeah, where they couldn't get their physical funds out of a bank account.
Yeah.
And for those who sort of want to question me on the QFS, for instance, which is the quantum financial system, go and try and pull 20 or 30,000 bucks worth of cash out of the bank at the minute. It's really hard. It takes roughly about 10 days to get cash out from any bank at the minute. So there's something going on in the background that not a lot of people are aware of, but it's certainly moving and changing. And gold and silver are a great way to offset some of your wealth. Worst case scenario, don't go and buy big bullion bars. Most people can't afford that at the minute, and that's cool. Go and buy the little stuff, the little tradable coins, the 1 ounce stuff. If you can't get them, just step up to the 10 ounce, whatever you can get. Silver for me is a really, really good, strong investment. It's cheap. The other day it was, I think, about 23 bucks an ounce US, whereas gold's sort of hovering around that 1700 US an ounce. So we've got a good mix of that, and we certainly encourage anyone, if you want to divest and put some funds away, get your cash out of the bank and just go and throw it into some gold. I often buy all of my stuff out of Perth Mint. Don't buy the minted stuff as well. Make sure you get the cast stuff. That's the real valuable stuff.
Excellent. That's good, really good advice there. So we've spoken about gold. You've shared about silver and gave some really good strategies on that. what about the real estate market? Because you're a real estate king, right? Like you've really nailed that area, building that $100 million property portfolio in just 6 years. So very, very impressive.
Yeah.
So,
Thank you.
there's all sorts of markets within the real estate market, right? I guess when people hear the real estate market, they think it's everything, but that's not entirely true, is it?
No, there's so many opportunities through real estate at the minute. I mean, you look at the house that I'm standing in now; it's doubled in value, and I haven't done much to it, other than build it. So, sorry, my wife has. And the stuff that we specialise in, which is your light industrial, commercial man caves, as I like to call them, and self storage. Everything's just absolutely walking out the door. You can't hold stocks quick enough; like everything's selling. And it's all stemming down to, I mean, people can't travel at the minute. All these restrictions are in play. People are starting to invest their money elsewhere, in those different methods. And real estate's a really good way to do that. It's not going to last forever, obviously. It never will. But, there's some really good opportunities out there at the minute to get some high yielding cash flow opportunities, whether it's residential, whether you go commercial or whether you go others. There are some really good opportunities out there to get involved. And just be mathematical in your decisions. You can get sold. I often talk about, when I was selling real estate, people would come in. You'd obviously, if you're selling a house to live in, you sell to the wife. Full stop, end of story. That's how it works. They're more of emotional beings. It's a home to live in long term. Versus you go to a commercial warehouse type thing, you're generally dealing with a man or a woman, but predominantly we deal with mostly men who are just about calculations. It's just, does this make sense or doesn't? That's the way it works. So, and we get a lot of, at present, we've got a lot of mortgage and super funds buying our stock. They're looking at things for a long-term hold, high yield, that they can pass on the returns to their investors as well. So there's so many things going on in the property market at the minute. I know, for instance, sake in Noosa, it's almost impossible to buy a house at the minute. And if you are, you're paying $1 million or more over. It's just insane.
Okay. And so if we just back up a little bit to, what you specialize in, and that light industrial, what you call man caves, why would they be more insulated against, say, a crash, an economy crashing due to a stock market crash, more so than other types of real estate investments?
Look, there's a variety of reasons for that. I mean, you look at the overall market conditions, and something that we do really well. I mean, residential performs really well, but at the end of the day, if there is a crash, your high-end market tends to go down more than the low-end market. So, anything sub $500,000 typically holds its value quite steadily. Rentals are very, very good on that level at that point in time, because what happens, 2008 was a great example of this, is, people in the high end were selling and renting in the low end. That's what happens. So the low end comes up real fast. So what we do is just remodel that onto the warehouse stuff. It's exactly the same platform. The difference now, and where the market, or where we've had great success in the market, it has been just assessing what's going on. Land lots are getting smaller and smaller. The toys are still increasing. Car collections, boats, jet skis, small businesses expanding. There's, thousands and thousands of ways people are just looking for something else. With a warehouse as well, you can buy it in your super fund and rent it back to yourself legally in a business. So there's so many opportunities and so many ways that you can skin a cat, so to speak. The reason I think it's insulated, like anything, nothing's a guarantee. But the reason I think it's insulated is purely because we really target down on that $500,000 or less price point, which is where everyone can afford. It's very simple from that aspect. Your nurses, your police officers, your paramedics, anyone on a reasonable size income can afford that market. Then you're always going to have tenants in that market as well. Again, one big thing up here is there's not a lot of rentals. So and that's right across the Sunshine Coast. It's not just Noosa. So you can find, if you can get into that market, it's a really good way to insulate yourself from a downturn. You can still have some high-end property as well, but if one property costs you 1.5 million and you might have 3 properties at 500,000 each, for me that's probably a better investment because you've got less risk in different areas. So the big key point that I'd say to all viewers is don't buy around the corner. It doesn't work.
Yeah.
Don't listen to family and friends and all that. Just because you can touch and feel it, it doesn't work. 9 times out of 10 it'll fail because the numbers don't stack up. So, you got to look at opportunities elsewhere. When I was starting out, negative gearing was the big thing, as it was back in the day. I ended up buying I was living in the Central Coast at the time in Sydney. I bought in the Gold Coast and I bought in WA, and both of those properties doubled within one was within 12 months, the other one was in about 14 months. So, I looked at numbers. I didn't just look at, what I could get in Terrigal or Wamberal or Camaray in Sydney, for instance sake. I looked outside of the areas because the numbers just weren't stacking up. Yeah, so it's a really good way to de-risk yourself and protect yourself against long-term downturns.
Yeah. And I know a lot of the clients that work with you, you have a historical data that you work on. When people always ask you, what sort of returns can I expect, Trent, right? So do you want to talk about some of those historical data figures that for those that are listening that might think, well, this sounds interesting, how can I get involved? What sort of returns is he talking about?
Sure. I mean, our historical data to date, up until today's date, is typically anywhere from 25 to 35% returns. And that's typically done over an 18-month period. That's changed a little bit at the minute. In fact, it's increased purely and simply because we've been able to engage and work with an AFSL-approved fund, which pay an interest rate as they go through. So, we get a multitude of clients come in. Our average client's sort of $200,000 to $500,000. Sophisticated investors, they're looking to get into something a bit different. We sometimes have people outside of that range as well. They'll come in, transact, and get those sort of returns. Now, that's pretty conservative with what we've done in the past. We've got real good proof of that as well. But I just recently paid out a project that was over 24 months, and they got 50% returns on their cash. So obviously they were very, very happy. From that aspect, we get a lot of people that say they want to be property developers, but don't really want to be property developers. They just want to be working and get their money working for them. We get a lot of professionals that want to talk to us about the same thing and, go off our coattails, so to speak. It's what we do for a living, and they like the aspect and the security and everything that's in play. It doesn't matter where you're looking. If you're getting anywhere from, above 20% returns, you're doing pretty well. At the best of times, but as I said, we've had payments that are higher than that. In fact, I've got 2 projects at the minute that are finishing that are probably going to be somewhere between 52 and 60% return on cash on those as well. So, there's some great opportunity out there. You just got to look.
Yeah, and that return on cash. So just if someone puts in $100,000 or someone puts in $200,000, at the end of the project, they're going to walk away with there's $200,000. They get the $200,000 back, plus they get the 60% on top of that, right?
I'll just work off 100 because it's easier on numbers, and I don't have my calculator on me at the minute. But if you put 100 in, you'd expect somewhere between 125 to 135 back. Right. The new fund deal that we've got is also 5% per annum paid quarterly over the term of the project. So you've got to add that in as well. We get a lot of clients. Had a client recently that he borrowed, I think it was 300. It was close to $300,000 on his home loan at a rate of, it was either 2.8 or 2.9. It was somewhere in there. So he's out. He's obviously got his money out working for him. He's paying the 2.8, but the percentage interest rate's paying that. The difference he's putting onto his home loan. So he's actually increasing his home loan as well as increasing his net worth. So. He's as happy as a pig in the proverbial. For that reason, we get a lot of clients that do that. We get a lot of super funds that do it. There's a whole range of different groups that work with us. I will state that it's not for everyone. You do have to understand risk and how to mitigate it properly. But once you get your head around it, it's easy. It really is quite simple. Got the recipe. We're just cooking the same recipe over and over and over again.
Yeah, that's really cool. And if someone, look, we're almost out of time, Trent. We like to keep these under 20 minutes, but if someone wants to know more about, some of the projects that you've got upcoming, or how to get
Sure.
involved to get those sorts of returns where they don't have to do the hard work, you guys do all of the work. Where can they go? What's their next step?
Yep. Well, mate, click on the link down here, wherever it is. There's my finger. Which is it'll come up in 1 second, which is Cam will populate it in the chats as well. So it's cashflowsrealestate.com/cashflow-class. We run a live Q&A every Thursday at 12:30. You're welcome to join, welcome to find out a little bit more if you wish. There's no obligation. You don't have to do anything. You can just come on and ask the questions that you may want to ask. We hold them quite regularly for obvious reasons. We get a ton of questions about this stuff. So yeah, you're welcome to join us at any time and jump on that website just to register.
All right. Well, Trent, thanks very much for coming on today and educating us on the great stock market crash coming and what to do next. Really appreciate your time.
Hold on when it happens.
Hold on and enjoy the ride.
Thanks, mate. Appreciate your time. Thank you, everyone, for attending.
Thanks, everyone. Bye.
Yeah.